Hi, everyone. So, let me be your constant reminder that listening to audios as an alternative to reading promotes health. An article that was written by a doctor says that when you sit, you use less energy than when you stand or move. Research has linked sitting for long periods of time with a number of health concerns. They include obesity and a cluster of conditions: increased blood pressure, high blood sugar, excess body fat around the waist, and abnormal cholesterol levels that make up metabolic syndrome. So it seems clear that less sitting and more moving overall contribute to better health. So, what are you waiting for? Subscribe to our channel, listen to audios, let's study, and be healthy at the same time. Thanks. Definition and concept of taxation. Taxation is the inherent power of the sovereign exercised through legislature, raises revenue to defray the necessary expenses of government. It is merely a way of apportioning the cost of government among those who, in some measure, are privileged to enjoy its benefits and must bear its burdens. Aban 2001. It is a mode by which governments make exactions for revenue in order to support their existence and carry out their legitimate objectives. Taxation may refer to either or both the power to tax or the act or process by which the taxing power is exercised. VTUG 2006. State policy of taxation in retrain law. 1. Promoting sustainable growth and inclusive economic growth by rationalization of Philippine internal revenue system. To rationalize means to enact policies for the betterment of the tax system that would benefit the government and trickle down to the constituents. 2. To provide equitable relief to improve levels of disposable income and increase economic activity. Disposable income is synonymous with purchasing power. It is financial empowerment of the citizen wherein their earning are not burdened by taxes imposed, which is counterproductive to the policy of promoting general welfare by increasing economic activity through trade and commerce. And 3. Provide social protection and all the needs under its jurisdiction. While there is no meaning in law with regard to social protection, it is defined as enacting policies that would reduce poverty, promoting efficient labor markets, etc. United Nations Research Institute for Social Development. And what is the purpose of taxation? Primary for revenue purposes, to raise funds or property to enable the state to promote the general welfare and protection of the people. And 2. Secondary or non revenue purpose, PR 2 EP. Promotion of general welfare. Taxation may be used as an implement of police power to promote the general welfare of the people. In the case of Lutz versus Araneta, GR 7859, the Supreme Court upheld the validity of the Sugar Adjustments Act, which imposed a tax on milled sugar since the purpose of the law was to strengthen an industry that is so undeniably vital to the economy, the sugar industry, Aban 2001. B. Regulation of activities or industries. Taxes may also be imposed for regulatory purposes, for instance, in the rehabilitation and stabilization of a threatened industry which is affected with public interest, like the oil industry, like Caltex Philippines versus Commission on Audit et al. 3 is the reduction of social inequality. A progressive system of taxation prevents the undue concentration of wealth in the hands of few individuals. Progressivity is based on the principle that those who are able to pay more should shoulder the bigger portion of the tax burden. D. Encourage economic growth. The grant of incentives or exemptions encourage investment, thereby stimulating economic activity. And finally, protectionism. Protective tariffs and custom duties are imposed as taxes in order to protect important sectors of the economy or local industries, as in the case of foreign importations. What is the nature of taxation? The nature of the state's power to tax is twofold. It is both an inherent and a legislative power. The inherent attribute of sovereignty. The power to tax is an attribute of sovereignty and is inherent in the state. It is a power emanating from necessity because it imposes a necessary burden to preserve the state's sovereignty. Philippine Guarantee Company versus Commissioner. It is an essential and inherent attribute of sovereignty, belonging as a matter of right to every independent government without being expressly conferred by the people. Pepsi Cola Bottling Company of the Philippines versus Municipal of Tanwan. It does not need constitutional conferment. Constitutional provisions do not give rise to the power to tax, but merely impose limitations on what would otherwise be an invincible power. Churchill and Tate versus Concepcion. So, why is the power to tax considered inherent in a sovereign state? It is considered inherent in a sovereign state because it is a necessary attribute of sovereignty. Without this power, no sovereign state can exist or endure. The power to tax proceeds upon the theory that the existence of a government is a necessity, and this power is an essential and inherent attribute of sovereignty, belonging as a matter of right to every independent state or government. No sovereign state can continue to exist without the means to pay its expenses, and that for those means it has the right to compel all citizens and property within its limit to contribute, hence the emergence of a power to tax. And what is then the legislative power of taxation? It is inherently legislative in nature and character in that the power of taxation can only be exercised through the enactment of law. It is legislative in nature since it involves the promulgation of laws. The legislature determines the coverage, object, nature, extent, and situs of the tax to be imposed. Such power is exclusively vested in the legislature except where the Constitution provides otherwise. Article 6, Section 28, number 2 of Article 10, Section 5 of the Constitution. It is based on the principle that taxes are a grant of the people who are taxed, and the grant must be made by the immediate representative of the people. And where the people have laid the power, there it must remain and be exercised. CIR versus Fortune Tobacco Corporation 559 Sprout 160. May legislative bodies enact laws to raise revenue in the absence of constitutional provisions granting said body the power to tax? Yes. The constitutional provisions relating to the power of taxation do not operate as grants of the power of taxation to the government, but instead merely constitute a limitation upon a power which would otherwise be practically without limit. Moreover, it is inherent in nature, being an attribute of sovereignty. There is thus no need for a constitutional grant for the state to exercise this power. Is the grant of the power of taxation inherent for both national and local government? No. It is inherent in the national government, but not in the local government unit, since the latter is merely a state's agency to carry out in detail the objects of the government. The LGU can only impose taxes when it is granted by the Constitution, like LGU's taxation power outside autonomous region, Article 10, Section 5 of the 1987 Constitution, or by legislation by Congress, like LGU's taxation power within the autonomous region, Article 10, Section 20 of the 1987 Constitution. What is the scope of legislative power in taxation? The determination of ASK, MAPS, or amount or rate of tax, as subjects of taxation like persons, property, occupation, exercises, or privileges to be taxed, provided they are within the taxing jurisdiction, and K, kind of tax to be collected, M, method of collection not exclusive to the Congress, A, apportionment of the tax, whether the tax shall be of general application or limited to a particular locality or partly general and partly local. P, purposes for which taxes shall be levied, provided they are public purposes. And S, situs of taxation. Number 2, the grant of tax exemptions and condonations. Number three, the power to specify or provide for administrative as well as judicial remedies. Philippine Petroleum Corporation versus Municipality of Pilila, GR 85318. Characteristics of taxation. CUPS or CUPS. Comprehensive, unlimited, plenary, supreme. Comprehensive covers persons, businesses, activities, professions, rights, and privileges. Unlimited, it is so unlimited in force and searching in extent that courts scarcely venture to declare that it is subject to any restrictions except those that such rests in the discretion of the authority which exercises it. TO versus BDRAM Regulatory Board, GR 75697. Plenary, it is complete. Under NIRC, the BIR may avail of certain remedies to ensure the collection of taxes. Taxes being the lifeblood of the government that should be collected without unnecessary hindrance. Every precaution must be taken not to unduly suppress it. Republic versus Kagiwa, 536 Scrap 193. And supreme, it is supreme insofar as the selection of the subject of taxation is concerned, but it does not mean that it is superior to the other inherent powers of the state. Explain the concept of wide spectrum of taxation. It means that taxation is one that extends to every business, trade, or occupation, to every object of industry, use, or enjoyment, and to every species of possession. It imposes a burden which, in case of failure to discharge the same, may be followed by the seizure and confiscation of property after the observance of due process. Similarities among taxation, police power, and eminent domain. They are inherent powers of the state. All are necessary attributes of the sovereign. 3. They exist independently of the Constitution. 4. They constitute the three methods by which the state interferes with private rights and property. 5. They presupposes equivalent compensation. And 6. The legislature can exercise all three powers. So, can police power and taxation coexist in one act of government? Yes. Taxation is no longer envisioned as a measure merely to raise revenue to support the existence of the government. Taxes may be levied with a regulatory purpose to provide a means for the rehabilitation and stabilization of a threatened industry which is affected with public interest as to be within the police power of the state. Caltex Philippines versus Commission and Audit. Thus, the power of taxation may be exercised to implement police power. Teo versus BD Distinction among the three inherent powers of the state. Authority who exercises the power under taxation is government or its political subdivision. For police power, it's government or its political subdivision. And for eminent domain, it's still government or public service, companies, and public utilities. The purpose of taxation is to raise revenue in support of the government. Regulation is merely incidental. Under police power, promotion of general welfare through regulations, and under eminent domain, to facilitate the taking of private property for public purpose. Now, under persons affected on taxation upon the community or class of individuals. Under police power, upon the community or class of individuals, and for eminent domain, on an individual as the owner of a particular property. Amount of monetary imposition. Under taxation, there is no ceiling except inherent limitations. Under police power, limited to the costs of regulation, issuance of license or surveillance. Under eminent domain, no imposition. The owner is paid the fair market value of his property. Benefits received. Under taxation, it is the protection of a secured, organized society. Benefits received from government or no direct benefit. Under police power, it is the maintenance of healthy economic standard of society. No direct benefit. Under eminent domain, the person receives the fair market value of the property taken from him, so there is a direct benefit result. Non-impairment of contracts. Under taxation, tax laws generally do not impair contracts unless the government is party to contract granting exemption for a consideration. Under police power, contracts may be impaired, and under eminent domain, the same contracts may be impaired. Now, for the test of validity, under taxation, it must be not contrary to inherent and constitutional limitations, and under police power, it must comply with the test on lawful subjects and lawful means, while under eminent domain must be for public purpose and with payment of just compensation. Example: an ordinance number SP 2095 of the Quezon City government imposes a socialized housing tax, or SHT, equivalent to 0.5% on the assessed value of land in excess of 100,000. The socialized housing tax will be used as one of the sources of funds for urban development and housing program. So the question is, can Quezon City impose such tax? The answer is yes. Cities are allowed to exercise such powers and discharge such functions and responsibilities as are necessary, appropriate, or incidental to efficient and effective provisions of the basic services and facilities, which include, among others, programs and projects for low-cost housing and other mass dwellings. The collection may accrue to its socialized housing programs and projects. The tax is not a pure exercise of taxing power or merely to raise revenue. It is levied with a regulatory purpose. The levy is primarily in the exercise of the police power for the general welfare of the entire city. It is in the case of Ferrer Jr. versus Bautista, GR number 210551. Taxation is distinguishable from police power as to the means employed to implement these public good goals. Those doctrines that are unique to taxation arose from peculiar considerations such as those especially punitive effects of taxation and the belief that taxes are the lifeblood of the state. Yet at the same time, it has been recognized that taxation may be made the implement of the state's police power. Example: Galaxia Telecommunications Company constructed a telecommunication tower for the purpose of receiving and transmitting cellular communications. Meanwhile, the municipal authorities passed an ordinance entitled An Ordinance Regulating the Establishment of Special Projects, which imposed fees to regulate activities particularly related to the construction and maintenance of various structures. Certain construction activities, which include cell site or telecommunications towers, is the imposition of the fee an exercise of the power of taxation? The answer is no. The designation given by the municipal authorities does not decide whether the imposition is properly a license tax or a license fee. The determining factors are the purpose and effect of the imposition, as may be apparent from the provision of the ordinance. If the generating of revenue is the primary purpose and regulation is merely incidental, the imposition is a tax. But if regulation is the primary purpose, the fact that incidentally revenue is also obtained does not make the imposition a tax. That's in the case of Girochi versus Department of Energy. The fees in the ordinance are not impositions on the building or structure itself. Rather, they are impositions on the activity subject of government regulations such as the installation and construction of the structures. It is primarily regulatory in nature and not primarily revenue raising. While the fees may contribute to the revenues of the municipality, this effect is merely incidental. Thus, the fees imposed in the said ordinance are not taxes. Smart Communications versus Municipality of Malvar, Batangas. Another example: revenue laws RA 6260 and PD 276 were enacted to establish the Coconut Investment Fund and Coconut Consumers Stabilization Fund, or COCO levy funds. These funds shall be owned by the coconut farmers in their private capacities under the Coconut Industry Code. In 2000, EO 313 was issued, creating the Coconut Trust Fund and designating the UCPB as the trustees bank. This aimed to provide financial assistance to the coconut farmers to the coconut industry and to other agri-related programs. UCPB suggested that the cocoa levy funds are closely similar to the SSS funds, which have been declared to be not public funds but properties of the SSS members and held merely in trust by the government. Are the cocoa levy funds in the nature of taxes and thus can only be used for public purpose? The answer is yes. The cocoa levy funds were raised pursuant to law to support a proper governmental purpose. They were raised with the use of the police and taxing powers of the state for the benefit of the coconut industry and its farmers in general. Unlike ordinary revenue laws, RA 6260 and PD 276 did not raise money to boost the government's general funds, but to provide means for the rehabilitation and stabilization of a threatened industry, the coconut industry, which is so affected with public interest as to be within the police power of the state. The subject laws are akin to the imposed sugar liens. It cannot be likened to SSS law, which collects premium contributions that are not taxes and not for public purpose. The SSS members pay contributions in exchange for insurance protection and benefits like loans, medical or health services, and retirement package, pambansang coalition ng mga samahang magsasaka, at manggagawa sa niyugan versus executive secretary. Another example, on February 26, 2004, RA 9257 was issued amending RA 7432, which provides that the 20% senior citizen discount may be claimed as a tax deduction from gross income, gross sales, or gross receipts. Petitioners challenged its constitutionality and prayed that the tax credit treatment of the 20% discount be reinstated. They posit that the resolution of this case lies in the determination of whether the legally mandated 20% senior citizen discount is an exercise of police power or eminent domain. If it is police power, no just compensation is warranted. But if it's eminent domain, the tax deduction scheme is unconstitutional because it is not a peso for peso reimbursement of the 20% discount given to senior citizens. Thus, it constitutes taking of private property without payment of just compensation. Is the tax deduction scheme an exercise of police power or the power of eminent domain? The answer is police power. The 20% discount given to senior citizens is a valid exercise of police power. Thus, even if the current law, through its tax deduction scheme, which abandoned the tax credit scheme under the previous law, does not provide for a peso for peso reimbursement of the 20% discount given by private establishments. No constitutional infirmity obtains because, being a valid exercise of police power, payment of just compensation is not warranted. The 20% discount is intended to improve the welfare of senior citizens who, at their age, are less likely to be gainfully employed, more prone to illnesses and other disabilities, and thus in need of subsidy in purchasing basic commodities. The discount serves to honor senior citizens who presumably spent the productive years of their lives on contributing to the development and progress of the nation. This distinct cultural Filipino practice of honoring the elderly is an integral part of this law. As to its nature and effects, the 20% discount is a regulation affecting the ability of private establishments to price their products and services relative to a special class of individuals, senior citizens for which the Constitution affords preferential concern. Manila Memorial Park versus DSWD. What is the theory and basis of taxation? The theories underlying the power of taxation are 1. Lifeblood theory, 2nd. Necessity theory, 3rd. Benefits protection theory or doctrine of symbiotic relationship, and 4th. Jurisdiction over subject and objects. Discuss the meaning and the implications of the statement taxes are the lifeblood of the government and their prompt and certain availability is an imperious need. It expresses the underlying basis of taxation, which is governmental necessity. For indeed, without taxation, a government can neither exist nor endure. Considering that taxes are the lifeblood of the government, and in Holmes' memorable metaphor, the price we pay for civilization, tax laws must be faithfully and strictly implemented. CIR versus Acosta. GR number 154068. Taxes should be collected promptly. No court shall have the authority to grant an injunction to restrain the collection of any internal revenue tax, fee, or charge imposed by the NIRC. Angeles City versus Angeles Electrical Corporation. Lifeblood theory. The government chiefly relies on taxation to obtain the means to carry on its operations. Taxes are essential to its very existence. CIR versus Solid Bank Corporation. What are the manifestations of lifeblood theory? Imposition even in the absence of constitutional grant. 2. States' right to select objects and subjects of taxation. 3. No injunction to enjoin collection of taxes except for a period of 60 days upon application to the CDA as an incident of its appellate jurisdiction. 4th, taxes could not be the subject of compensation and set off, subject to certain exceptions. 5. A valid tax may result in destruction of property. Necessity theory. The theory behind the exercise of the power to tax emanates from necessity. Without taxes, the government cannot fulfill its mandate of promoting the general welfare and well-being of the people. Girochi versus Doe. It is a necessary burden to preserve the state's sovereignty and a means to give the citizenry an army to resist aggression, a navy to defend its shores from invasion, a corps of civil servants to serve, public improvements for the enjoyment of the citizenry, and those which come within the state's territory, and facilities and protection which a government is supposed to provide. Benefits protection theory, or the doctrine of symbiotic relationship. It involves the power of the state to demand and receive taxes based on the reciprocal duties of support and protection between the state and its citizens. Taxes are what we pay for a civilized society. Without taxes, the government would be paralyzed for lack of motive power to activate and operate it. Hence, despite the natural reluctance to surrender part of one's earned income to the taxing authorities, every person who is able must contribute his share in the running of the government. The government, for its part, is expected to respond in the form of tangible and intangible benefits intended to improve the lives of the people and enhance their material and moral values. CIR versus Alge, GR 28896. Now, special benefits to taxpayers are not required. A person cannot object to or resist the payment of taxes solely because no personal benefit to him can be pointed out arising from the tax. That is Lorenzo versus Posadas. The expenses of government, having for their object the interest of all, should be borne by everyone, and the more man enjoys the advantages of society, the more he ought to hold himself honored in contributing to those expenses. Abacada Guru Partalis versus Ermita. Jurisdiction over subjects and objects. It is the country, state, or sovereign that gives protection and has the right to demand payment of taxes with which to finance activities so it could continue to give protection. Taxation is territorial because it is only within the confines of its territory that a country, state, or sovereign may give protection. The basic principles of a sound taxation system or the canons of taxation, we use the acronym FAT, F-A-T. That means fiscal adequacy, revenue raise must be sufficient to meet government or public expenditures and other public needs. Chavez versus Ongpin. Neither an excess nor a deficiency of revenue vis-a-vis the needs of government would be in keeping with the principle. A. Administrative feasibility. The tax system should be capable of being effectively administered and enforced with the least inconvenience to the taxpayer. This is Yes versus Secretary of Finance. Question: True or false? A law that allows taxes to be paid either in cash or in kind is valid? True. There is no law which requires payment of taxes in cash only. However, a law allowing payment of taxes in kind, although valid, may pose problems of valuation, hence, will violate the principle of administrative feasibility. Now, letter T is theoretical justice. Must take into consideration the taxpayer's ability to pay. Ability to pay theory. Article 6, Section 28, Number 1 of the 1987 Constitution mandates that the rule on taxation must be uniform and equitable, and that the state must evolve a progressive system of taxation. A violation of the principle of a sound tax system may or may not invalidate a tax law. A tax law will retain its validity even if it's not in consonance with the principles of fiscal adequacy and administrative feasibility, because the Constitution does not expressly require so. These principles are only designated to make our tax system sound. However, if a tax law runs contrary to the principle of theoretical justice, such violation will render the law unconstitutional, considering that under the Constitution, the rule of taxation should be uniform and equitable. Question: Is the VAT law violative of the administrative feasibility principle? No. The VAT law is principally aimed to rationalize the system of taxes on goods and services, thus simplifying tax administration and making the system more equitable to enable the country to attain economic recovery. Kapatiran ng mga naglilingkod sa pamalahan versus TAN. Another question: Is the imposition of VAT on tollway operation valid? Yes. Administrative feasibility is one of the canons of a sound system. Not sound system, but sound tax system. Non-observance of the canon, however, will not render a tax imposition invalid, except to the extent that specific constitutional or statutory limitations are impaired. Thus, even if the imposition of VAT on tollway operations may seem burdensome to implement, it is not necessarily invalid unless some aspect of it is shown to violate any law or the Constitution. Diaz versus Secretary of Finance. Now, Frank Chavez, a taxpayer in Realty Owner Association of the Philippines, ROAP, alleged that EU 73, providing for the collection of real property taxes as provided for under Section 21 of PD 464 or the Real Property Tax Code, is unconstitutional because it accelerated the application of the General Revision of Assessments to January 1, 1987, thereby increasing real property taxes by 100% to 400% on improvements and up to 100% on land, which would necessarily lead to confiscation of property. Is the contention of the Chavez and ROAP correct? Answer is no. Without EU 73, the basis for collection of real property taxes will still be the 1978 revision of property values. Certainly, to continue collecting real property taxes based on valuations arrived at several years ago, in disregard of the increase in the value of the real properties that have occurred since then, is not in consonance with a sound tax system. Fiscal adequacy, which is one of the characteristics of a sound tax system, requires that sources of revenues must be adequate to meet government expenditures and their variations. Chavez versus Ongpin. The scope and limitation of taxation. We use the acronym PITIE. PITIE. Inherent limitations. P, public purpose. 2, inherently legislative. T, territorial. 4, international comedy. 5, exemption of government entities, agencies, and instrumentalities. So, what is the constitutional limitations? 1. Provisions directly affecting taxation, which is prohibition against imprisonment for non-payment of poll tax. Uniformity and equality of taxation, which is found in Article 6, Section 28. Grant by Congress of authority to the President to impose tariff rates, that is Article 6, Section 28. Prohibition against taxation of religious, charitable entities and educational entities, the same section. Prohibition against taxation of non-stock, non-profit educational institution under Article 9, Section 4. Majority vote of Congress for grant of tax exemptions, Article 6, Section 28. Prohibition on use of tax levied for special purposes, Article 6, Section 29. President's veto power and appropriation revenue tariff bills, and that is Article 6, Section 27. Non-impairment of jurisdiction of the Supreme Court, Article 6, Section 30. Grant of power to the LGUs to create its own sources of revenue, that is Article 9, Section 5. Origin of revenue and tariff bills, Article 6, Section 24. And no appropriation or use of public money for religious purposes, found in Article 6, Section 28. Number 2, provisions indirectly affecting taxation, like Article 3 of the 1987 Constitution. Due process, Section 1. Equal protection, Section 1. Religious freedom, Section 2. Non-impairment of obligations of contracts, Section 10. Freedom of the press, Section 4. Now let's take a look at it in detail. Under inherent limitations, this is for public purpose. The proceeds of tax must be used for the support of the state, for some recognized objective of the government, or to directly promote the welfare of the community. So tax is considered for public purpose if it is for the welfare of the nation and for a greater portion of the population. If it affects the area as a community rather than as an individual, and it is designed to support the services of the government for some of its recognized objects. So the tests in determining public purpose is 1. The duty test, whether the thing to be furthered by the appropriation of public revenue is something which is the duty of the state as a government to provide. Note, the term public purpose is not defined. It is an elastic concept that can be hammered to fit modern standards. Jurisprudence states that public purpose should be given a broad interpretation. It does not only pertain to those purposes which are traditionally viewed as essentially government functions, such as building roads and delivery of basic services, but also includes those purposes designed to promote social justice. Thus, public money may now be used for the relocation of illegal settlers, low-cost housing, and urban agrarian reform. That is under Planters Products versus Fertifield Corporation. Number 2 is the promotion of general welfare test, which is whether the proceeds of the tax will directly promote the welfare of the community in equal measure. When a tax law is only amassed to exact funds from the public when its true intent is to give undue benefit and advantage to a private enterprise, that law will not satisfy the requirement of public purpose. So what is the determination when enacted law, tax law, is for public purpose? It lies in the Congress. However, this will not prevent the court from questioning the propriety of such statute on the ground that the law enacted is not for a public purpose. But once it is settled that the law is for a public purpose, the court may no longer inquire into the wisdom, expediency, or necessity of such tax measure. Note, if the tax measure is not for public purpose, the act amounts to confiscation of property. Principles relative to public purpose. Tax revenue must not be used for purely private purposes or for the exclusive benefit of private persons. Inequalities resulting from the singling out of one particular class for taxation or exemption infringe no constitutional limitation because the legislature is free to select the subjects of taxation. Note, legislature is not required to adopt a policy of all or none, for the Congress has the power to select the object of taxation Lutz versus Araneda. An individual taxpayer need not derive direct benefits from the tax. Public purpose is continually expanding. Areas formerly left to the private initiative now lose their boundaries and may be undertaken by the government if it is to meet the increasing social challenges of the times. The public purpose of the tax law must exist at the time of its enactment. Pascual versus Secretary of Public Works. Now, question: are subsequent laws which convert a public fund to private properties valid? No. Taxes could be exacted only for a public purpose. They cannot be declared private properties of individuals, although such individuals fall within a distinct group of persons. Pambansang Koalisyon ng mga Samahang Magsasaka at Manggagawa sa Niyugan versus Executive Secretary. Now, Lutz assailed the constitutionality of Sections 2 and 3 of CA 567, which provided for an increase of the existing tax on the manufacture of sugar. Lutz alleged such tax as unconstitutional and void for not being levied for a public purpose, but for the aid and support of the sugar industry exclusively. Is the tax law increasing the existing tax on the manufacture of sugar valid? Yes. The protection and promotion of the sugar industry is a matter of public concern. The legislature may determine within reasonable bounds what is necessary for its protection and expedient for its promotion. Legislative discretion must be allowed full play, subject only to the test of reasonableness. If objective and methods alike are constitutionally valid, there is no reason why the state may not levy taxes to raise funds for their prosecution and attainment. Taxation may be made to implement the state's police power. Lutz versus Araneda. Another question: is the tax imposed on the sale, lease, or disposition of videograms for a public purpose? Yes. Such tax is imposed primarily for answering the need for regulating the video industry, particularly because of the rampant film piracy, the flagrant violation of intellectual property rights, and the proliferation of pornographic videotapes. While the direct beneficiary of said imposition is the movie industry, the citizens are held to be its indirect beneficiaries. Teo versus Videogram Regulatory Board. Inherently legislative. What does it mean? Only the legislature has the full discretion as to the person's property, occupation, or business to be taxed, provided these are all within the state's territorial jurisdiction. It can also fully determine the amount or rate of tax, the kind of tax to be imposed, and method of collection. General rule: the power to tax is exclusively vested in the legislative body, being inherent in nature. Hence, it may not be delegated. Delegata potestas non potest delegere. The powers which Congress is prohibited from delegating are those which are strictly or inherently and exclusively legislative. Purely legislative power, which can never be delegated, has been described as the authority to make a complete law, complete as to the time when it shall take effect, and as to whom it shall be applicable, and to determine the expediency of its enactment. Abacada Guru Party List versus Honorable Executive Secretary. It cannot be delegated without infringing upon the theory of separation of powers. Pepsi Cola Bottling Company. What are the non-delegable legislative powers? Selection of subject to be taxed, determination of purposes for which taxes shall be levied, fixing of the rate or amount of taxation, situs of tax, and kind of tax. Exceptions. Delegation to local government refers to the power of LGUs to create its own source of revenue and to levy taxes, fees, and charges, and that is Article 10, Section 5 of the 1987 Constitution. Note, Article 10, Section 5 of the Constitution does not change the doctrine that municipal corporations do not possess inherent powers of taxation. What it does is to confer municipal corporations a general power to levy taxes and otherwise create sources of revenue, and they no longer have to wait for a statutory grant of these powers and the power of the legislative authority relative to the fiscal powers of local governments has been reduced to the authority to impose limitations on municipal powers. Thus, in interpreting statutory provisions on municipal fiscal powers, doubts will be resolved in favor of municipal corporations. Quezon City et al. Versus ABS-CBN Broadcasting. Now, 2. Delegation to the President. The authority of the President to fix tariff rates, import or export quotas, tonnage and wharfage dues, or other duties and imposts. Article 6, Section 28, Number 2. Note, when Congress tasks the President or his or her alter egos to impose safeguard measures under the delineated conditions, the President or the alter egos may be properly deemed as agents of Congress to perform an act that inherently belongs to a matter of right to the legislature. It is basic agency law that the agent may not act beyond the specifically delegated powers or disregard the restrictions imposed by the principal. Southern Cross Cement Corporation versus cement manufacturers. And third, delegation to administrative agencies. When the delegation relates merely to administrative implementation that may call for some degree of discretionary powers under sufficient standard expressed by law, Cervantes versus Auditor General, or implied from the policy and purposes of the Act, Maceda versus Macaraig. Note, technically, this does not amount to a delegation of the power to tax because the question which should be determined by Congress are already answered by Congress before the tax law leaves Congress. Example, in order to raise revenue for the repair and maintenance of the newly constructed City Hall of Makati, the city mayor ordered the collection of 1 peso called elevator tax every time a person rides any of the high-tech elevators in the City Hall during the hours of 8 a.m. to 10 a.m. and 4 p.m. to 6 p.m. Is the imposition of elevator tax valid? Answer is no. The imposition of a tax, fee, or charge, or the generation of revenue under the local government code shall be exercised by the sanguinian of the LGU concerned through an appropriate ordinance. The city mayor alone could not order the collection of the tax. As such, the elevator tax is an invalid imposition. Another, the municipality of Malolos passed an ordinance imposing a tax on any sale or transfer of real property located within the municipality at a rate of 1/4 of 1% of the total consideration of the transaction. X sold a parcel of land in Malolos, which he inherited from his deceased parents, and refused to pay the aforesaid tax. He instead filed a appropriate case asking that the ordinance be declared null and void, since such a tax can only be collected by the national government, as in fact he has paid the BIR the required capital gains tax. The municipality countered that under the Constitution, each local government is vested with the power to create its own sources of revenue and to levy taxes, and it imposed the subject tax in the exercise of said constitutional authority. Resolved the controversy. The ordinance is void. The LGC only allows provinces and cities to impose a tax on the transfer of ownership of real property, sections 135 and 151. Municipalities are prohibited from imposing said tax that provinces are specifically authorized to levy. While it is true that the Constitution has given broad powers of taxation to LGUs, this delegation, however, is subject to such limitations as may be provided by law. Article 10, Section 5 of the 1987 Constitution. RA 9337, or the VAT Reform Act, provides that the President, upon the recommendation of the Secretary of Finance, shall, effective January 1, 2006, raise the rate of value-added tax to 12% after any of the following conditions have been satisfied, which is value-added tax collection as a percentage of gross domestic product or GDP of the previous year exceeds 2 and 4/5%, or 2. National government deficit as a percentage of GDP of the previous year exceeds 1 and 1/2%. Was there an invalid delegation of legislative power? No. there is no undue delegation of legislative power, but only of the discretion as to the execution of the law. This is constitutionally permissible. Congress did not abdicate its functions or unduly delegate power when it describes what job must be done, who must do it, and what is the scope of its authority. The Secretary of Finance in this case becomes merely the agent of the legislative department to determine and declare the event upon which its expressed will is to take effect. The President cannot set aside the findings of the Secretary of Finance, who is not under the conditions acting as her alter ego or subordinate. Abacada, Guru Partilis versus Ermita. How about territorial? Taxation may be exercised only within the territorial jurisdiction. The taxing authority may determine the place of taxation or tax situs. The general rule is the taxing power of a country is limited to persons and property within and subject to its jurisdiction. Reasons: taxation is an act of sovereignty which could only be exercised within a country's territorial limits. And number two, this is based on the theory that taxes are paid for the protection and services provided by the taxing authority which could not be provided outside the territorial boundaries of the taxing state. Exceptions: where tax laws operate outside territorial jurisdiction, that is, taxation of resident citizens on their incomes derived abroad. 2. Where tax laws do not operate within the territorial jurisdiction of the state, A. When exempted by treaty obligations or when exempted by international comity. International comity refers to the respect accorded by nations to each other because they are sovereign equals. Thus, the property or income of a sovereign state may not be the subject of taxation by another state. This is a limitation founded on reciprocity designed to maintain harmonious and productive relationships among the various states. Under international comity, a state must recognize the generally accepted tenets of international law, among which are the principles of sovereign equality among states and their freedom from suit without their consent. That limits the authority of a government to effectively impose taxes in a sovereign state and its instrumentalities as well as its property held and activities undertaken in that capacity. International comity has a limitation on the power to tax. And the reasons are: 1. Par imperem non habet imperium. As between equals, there is no sovereign. Doctrine of sovereign equality. Number 2, the concept that when a foreign sovereign enters the territorial jurisdiction of another, it does not subject itself to the jurisdiction of the other. And 3, the rule of international law that a foreign government may not be sued without its consent so far as it is useless to impose a tax which could not be collected. Example: X, B, ABCD Corporation is a domestic corporation with individual and corporate shareholders who are residents of the United States. For the second quarter of 1983, these U.S.-based individual and corporate stockholders received cash dividends from the corporation. The corresponding withholding tax on dividend income, 30% for individual and 35% for corporate non-resident stockholders, was deducted at source and remitted to the BIR. On May 15, 1984, ABCD filed with the Commissioner of Internal Revenue a formal claim for refund, alleging that under the RP-US tax treaty, the deduction withheld at source as tax on dividends earned was fixed at 25% of said income. Thus, ABC asserted that it overpaid the withholding tax due on the cash dividends given to its non-resident stockholders in the U.S. The Commissioner denied the claim. On January 17, 1985, ABCD filed a petition with the Court of Tax Appeals, CDA, reiterating its demand for refund. Is the contention of ABCD Corporation correct? Why or why not? Yes, the provision of a treaty must take precedence over and above the provision of the taxing or local taxing statute, consonant with the principle of international comity. Tax treaties are accepted limitations to the power of taxation. Thus, the CDA should apply the treaty provision so that the claim for refund representing the difference between the amount actually withheld and paid to the BIR and the amount due and payable under the treaty should be granted. Hawaiian Philippine Company versus CIR. What is the principle of pacta sunt servanda in taxation? Observance of any treaty obligation binding upon the government of the Philippines is anchored on the constitutional provision that the Philippines adopts the generally accepted principles of international law as part of the law of the land. Pacta sunt servanda is a fundamental international law principle that requires agreeing parties to comply with their treaty obligations in good faith. Hence, the application of the provisions of the NIRC must be subject to the provisions of tax treaties entered into by the Philippines with foreign countries. Air Canada versus CIR. What is now the exemption from taxation of government entities? General rule, the government is exempted from tax. The reason? Otherwise would be taking money from one pocket and putting it in another. Exception, when it chooses to tax itself. Nothing prevents Congress from decreeing that even instrumentalities or agencies of the government performing government functions may be subject to tax, where it is done precisely to fulfill a constitutional mandate and national policy. No one can doubt its wisdom. MCIAA versus Marcos. Government may tax itself. Since sovereignty is absolute and taxation is an act of high sovereignty, the state, if so minded, could tax itself, including its political subdivision, Maceda versus Macaraig. National government is exempt from local taxation. If the taxing authority is the LGU, RA 7160 expressly prohibits LGUs from levying tax on the national government, its agencies, and instrumentalities, and other LGUs. In Manila International Airport Authority versus CA, MIAA's airport lands and buildings are exempt from real estate tax imposed by local governments. Being an instrumentality of the national government, it is exempt from local taxation. Also, the real properties of MIAA are owned by the Republic of the Philippines and thus exempt from real estate tax. Agency of the government. It refers to any of the various units of the government, including a department, bureau, office, instrumentality, or government-owned or controlled corporation, or a local government, or a distinct unit therein. Taxability of agencies of government. Performing governmental functions, tax exempt unless expressly taxed. Performing propriety functions subject to tax unless expressly exempted. Instrumentality of the government. It refers to any agency of national government not integrated within the department framework, vested with special functions or jurisdiction by law, endowed with some, if not all, corporate powers, administering special funds, and enjoying operational autonomy, usually through charter. What is the taxability of instrumentality of government? A government instrumentality falls under Section 133 of the LGC, which states common limitations of the taxing powers of local government units unless otherwise provided herein, the exercise of the taxing powers of provinces, cities, municipalities, and barangays shall not extend to the levy of the following taxes, fees, or charges of any kind on the national government, its agencies and instrumentalities, and local government units. Now, example, LLL is a government instrumentality created by executive order to be primarily responsible for integrating and directing all reclamation projects for the national government. It was not organized as a stock or a non-stock corporation, nor was it intended to operate commercially and compete in the private market. By virtue of its mandate, LLL reclaimed several portions of the foreshore and offshore areas of the Manila Bay, some of which were within the territorial jurisdiction of Quezon City. Certificates of title to the reclaimed properties in Quezon City were issued in the name of LLL in 2008. In 2014, Quezon City issued warrants of levy on said reclaimed properties of LLL based on the assessment for delinquent property taxes for the year 2010 to 2013. Are the reclaimed properties registered in the name of LLL subject to real property tax? Will your answer be the same in letter A if from 2010 to the present time, LLL is leasing portions of the reclaimed properties for the establishment and use of popular fast food restaurants, J Burgers, G Pizza, and K Chicken? Answer to letter A, the reclaimed properties are not subject to real property tax because LLL is a government instrumentality. Under the law, Real property owned by the Republic of the Philippines is exempt from real property tax unless the beneficial use thereof has been granted to a taxable person. When the title of the real property is transferred to LLL, the Republic remains the owner of the real property. Thus, such arrangement does not result in the loss of the tax exemption. Answer to letter B, no. As a rule, properties owned by the Republic of the Philippines are exempt from real property tax except when beneficial use thereof has been granted for consideration or otherwise to a taxable person. When LLL lease out portions of the reclaimed properties to taxable entities, such as popular fast food restaurants, the reclaimed properties are subject to real property tax. Disclaimer, this is a 2019 Golden Note in taxation, which is readily available online, so there is no copyright or infringement intended. I hope my audios help. See you on the next upload. Thanks.